Hello there everyone, today's video I take a deep dive into the recent autumn statement pronouncements. What exactly did the Chancellor say, or actually more specifically what didn't he say that was buried in the Green Book, the HM Treasury documents that contain all the costings, all the yields, all the anticipated tax that the government think they're going to bring in over the next few years based on Jeremy Hunt's announcements a couple of days ago, and it does make for some fascinating reading. So what I'm going to do in this video is go through and explain the changes and what the government thinks they will bring in, because that's always fascinating. Part of my job as a tax advisor, I'm always keen to know why the government has decided to target something, and also what do they think they will bring in from that policy. It's always very interesting. Now, of course, in these figures we're going to go through, they are basically what the government think they're going to take for the next 6 years up to the end of 27-28 fiscal year. Now, important to say, over the years, over the decades, these predictions, some of them have proved right, some of them have proved so inaccurate you wouldn't believe, because what the government can't predict is obviously human behaviors as a result of bringing in certain tax policies. Now, like in my lifetime, a long time ago, I was very little, we had 98% top rate of tax, and the government at the time could not have foreseen that thousands of people would just leave the UK, but not just individuals, businesses as well. I remember one of the Bond films, I think it was Moonraker, that was all shot and produced in France instead of Pinewood in the UK because of the tax situation. The government couldn't have foreseen that when they brought in the increased rates, but that's what prompts human behavior. What's it going to do? People are going to leave, people are going to do things differently. So a lot of these numbers we're going to go through, who knows what will transpire, but at least we know the thinking behind the Chancellor and the Treasury officials. We know what they expect they will bring in. Whether or not it does what they think is another matter. But anyway, I digress. So let's get straight into it. Let's have a look at these numbers. Look at these announcements. First one, big one, windfall tax. Now, they already previously said windfall tax, 25% of the profits of the energy companies. Then they announced in the autumn statement that would be bumped up to 35%. So that additional 10% is expected to bring in 19.5 billion over the next 5 years. The total windfall tax, which combines what was announced a couple of days ago and earlier on in the year, is expected to bring in 41 billion. So 41 billion pounds from the energy companies to the end of the fiscal year 27-28. Big figure. Next, another announcement, electricity generator levy for those who generate electricity. They're getting clobbered. It's not just the oil and the gas companies. The electricity generator levy expected to bring in 14 billion. Next one, dividend allowance. Thousands of businesses, entrepreneurs, SME owners pay themselves with dividends. You always get the first £2,000 tax-free, and then the rest of it depends on your marginal rate of income tax. But the first £2,000 tax-free. Terrific. It's been that way for many years. That will disappear, and that £2,000 will go to £1,000 next year, and then it'll drop to £500. So you'll only get the first £500 of your dividends tax-free, not £2,000. And that will bring in £3 billion, it is predicted, for the Exchequer. So that's $3 billion they'll get from reducing that dividend allowance. Next one, top rate of income tax. One of the big ones that was trumpeted, heralded in the news, got a lot of press attention. The point at which 45p kicks in will hit those that earn above 125 grand. So that's going to bring in just shy of 4 billion over the next 5.5 years. 4 billion pounds, top rate of income tax, affecting more people. CGT allowance. Didn't see this one coming. This was not anywhere near my predictions a few days before the autumn statement. CGT allowance. Now, this is where you sell assets, capital gains allowance. You get the first £12,300 absolutely tax-free. Similar amount to the income tax tax-free allowance, which is 12,500. This is 12,300 for capital gains, and actually, not many people do know about this. Often people are surprised, pleasantly surprised, when they do have capital gains tax to pay. Particularly, let's say if they're selling some shares in their business, they've been awarded some stock options and they've sold some shares. A lot of people working for the US big tech firms. This is more commonplace now in the UK, and they're pleasantly surprised that they don't have to pay tax on the first 12.5. Well, unfortunately, that pleasant surprise will no longer be so pleasant, because that 12,300 reduced to 6,000 next year, and then it's going to be reduced to 3,000. So your tax-free amount of selling assets when you have capital gains in play, you will no longer get 12,300 tax-free, but you will get £3,000 tax-free. That's going to bring in about 1.6 bill up to 27, 28. Next one, VED, Vehicle Excise Duty. So currently, if you are an electric car driver, you are paying less road tax than someone who has an internal combustion vehicle, petrol or diesel. Now, from 2025, the government are going to align the vehicle excise duty rates. So it doesn't matter what type of car you have, electric car, petrol, diesel, you'll all pay the same. And that alignment, so that so that the electric car drivers don't have that advantage for the road tax, the vehicle excise duty, it's going to bring in 3 billion. So that's going to bring in 3 billion for the Treasury. So what have we seen so far in the first half? The biggie is obviously the windfall tax, 41 bill. All these other ones are a lot smaller in comparison. So let's move on. What else have we got? Right. The one that was probably received most of the attention, in addition to the 45p kicking in at 125 grand of earnings, was the fiscal drag, which got a lot of airtime. More and more people becoming either taxpayers for the first time or higher rate taxpayers, because the thresholds for income tax and national insurance will be frozen until 2028. So that was all over the headlines. But interestingly enough, when you look at the numbers and you look at the government's predictions, and like I said, this may not transpire to be true. We'll see in 5 years' time how far out they were in their predictions, but only 1.2 billion. So all that fanfare, all that hurrah in the press, this is only expected to actually bring in 1.2 billion over the next 5 fiscal years. Quite a small amount. I was quite surprised by that when I looked at that. So there you go. Next one. Company car tax. Many people have a company car. Many people have an electric company car. Now, the benefit in kind for having an electric company car is very low. It's 2%. And it's going to be 2% for the next couple of years. But then the government announced 2 days ago that they will increase it 1% a year right up until 2028 from 2024. So it's going to be 2%, and then it's going to stay the same, and it's going to go 3, 4, 5. So still the max will be 5% benefit in kind on driving an electric company car by 2028. Still quite low, but that's going to bring in 535 million. So that's actually the lowest yield we've seen so far. The first time we've seen something under $1 billion. So extra tax on company car benefit in kind for electric cars, but not too onerous. Right, here's the one that caught my eye. This is the big one. No one was really talking about this in the media, in the press, but this is a big tax take. What is it? It's freezing the employer NI threshold. So the point, so when the employers, as you know, have to pay Class 1 national insurance, in addition to the employees paying their Class 1 national insurance, so you've got people on your payroll, you're an employer, you have to pay employers NI. That threshold will also be frozen for 5 years. So more and more, as wage inflation and people earn more, the tax bill for the employer will go up. So you're a business owner, you've got staff, the cost of having those staff is going to go up, and it's going to go up significantly, because look at this, 25 billion. It's expected over the next 5.5 years, 25 billion would be the increase in the Treasury's coffers due to this policy announcement. So this is the one that got all the headlines, all the personal ones, the income, the individuals, the income tax, the NI. If you're a worker, if you got a job, you're going to be paying a lot more. But that is nothing in compared to this. 1.2 billion that's going to raise, but 25 billion. So it's the employers across the nation. You've got your own business. If you employ staff, it's going to cost you a lot more. And employers, national insurance, 25 billion. Plays 1.2 for the employees and the individuals, but for the business taxpayer, big change. Nasty. Right, what else? Global minimum tax. Bit of geopolitics kicking into this. Now, this is all stemming from perceived unfairness. Going back many years, that a lot of these big firms, particularly in the tech space, can now run their business from anywhere in the world, have their HQ in offshore jurisdictions, everything else. And a lot of this stuff, they're not doing anything tax avoidance. They're doing clever tax planning. Everything's legit. They're just taking advantage of the tax rules, playing by the rules. And people may say, oh, well, that's not fair, anything else. Forget fairness. That's the law. If they're abiding by the law, then if you want to whinge about it, change the law. So people have been whinging about it, a lot of political pressure. When the G7 got together, only a couple of years ago, they said, look, all this, all these guys, these companies, we think that there should be what we call a minimal global tax rate, that no matter where you are in the world, wherever you headquarter your business, you should pay a minimum level of tax. And I remember at the time thinking, this is never going to work. How can you get, of the OECD, because it's beyond just the G7, but the rich countries think tank, if you will, OECD, you're trying to get hundreds of countries to agree on this, a global minimum level of tax that everyone sticks to. But this is they're trying to put this through. This is trying to be workable now. They're trying to bring this in, and now for the first time in the UK, we've brought this in, and we're starting to see it. And it's coming just 2 days ago. They announced, look, global minimum tax, and it is the level is 15%, by the way. So what they're saying, look, if you're a multinational and let's say you're in the UK, but for whatever reason you're not paying the headline rate of UK tax because you're doing some planning or whatever, the minimum that you got to pay is 15%. Not only that, if you've got offshore jurisdictions and you're taking profits from your offshore centres, again, you must pay minimum 15% tax. So this globalization, this geopolitics of having a minimum global tax looks like it's coming in. Our government, this is the first time it's been legislated for. So watch this space. Like I said, it's coming. I didn't think this would happen anytime soon, but it's in. It's in right now. Affects largely the multinationals. There's not many SMEs, I would say, who have got an effective tax rate way lower than that are going to be hit for this. Like I said, most people will have something close to the 19% as is, but we'll come on and talk about the CT hikes in a moment. So next one, R&D. Great tax relief, encourages innovation, but unfortunately quite a lot of businesses have been trying it on a bit and abusing the system, the generosity of the R&D tax relief. So the government said, look, we're going to rebalance it, because there's actually two separate reliefs. There's what we call the SME scheme and then another R&D scheme. And the government said, we think that there's too much abuse going on over here and not so much over here, so we're going to make the tax breaks not as good here and better over here. Basically, it's a rebalance between the reliefs. So the SME relief that smaller businesses currently use, where they get this enhanced 130%, looks like that enhancement will come down. But I'm going to do separate videos on what that means later on. But a rebalancing of R&D will be coming in, and that's going to bring in an extra 4.5 billion to the Treasury. So more information coming on the rebalancing of R&D. So next one, a bit more talking about the whole fiscal drag thing and freezing the thresholds. like we've seen already on the individuals and the employers. VAT. So VAT, the point at which you have to be VAT registered, £85,000. If that's frozen, as business more over time, more and more businesses are going to be caught into having to pay VAT because they're going to get to that £85,000 turnover. If that doesn't change, you will bring in more people, will be sucked into the VAT net, and the government reckon that will bring in 1.5 billion over the next few years. So maintaining the VAT threshold, 85 grand. Now, one of the things that Liz Truss, Kwasi Kwarteng brought in only a few weeks ago in the what was it called now? The mini budget, the growth plan it was called, wasn't it? It was the growth plan. So the one that pretty much got axed, everything got reversed. One of the few things that stayed was the SDLT breaks. SDLT breaks for buying properties. There was a couple in there for first-time buyers and other buyers, the point at which you pay SDLT. So that hasn't been binned off from now, but Jeremy Hunt has basically said, look, we're going to reverse that from 2025. So those generous tax breaks on SDLT, acquiring properties, they will no longer exist, but from 2025, and that will bring in 4 billion for the government. And finally, just a memo at the bottom, because this wasn't an announcement that came in a couple of days ago, but it's something that we know about that is going to happen, but it's previously announced, and it's a big figure. And it's the fact that the corporation tax rates, the direction of travel on corporation tax, 19% for a while. Several years ago, 2-3 years ago, Boris, before the pandemic, wanted it out there and to be known that the direction of travel was downwards. They wanted to get it to 17%. Ultimately, that didn't happen. And then in the pandemic, when Sunak was the Chancellor, he said, I'm going to put this up to 25% above a certain profit level, 250 grand. And then in the growth plan, when Kwasi Kwarteng was the Chancellor, he said, I'm going to reverse that. It's going to be 19%. And then we now know that reversal is not going to come in. So what was previously announced by Sunak a couple of years ago is going to happen. And that 25% rate for corporation tax is going to kick in from next year, from 2023. And it's going to bring in an estimated 83 billion to the Treasury up until fiscal year 27-28. So that is the biggie. Of all of these announcements, the biggie is the corporation tax, and 83 billion, which is more than double the windfall tax. So there you go. So that's just basically looking at the announcements in the autumn statement, but also looking at what the HMRC or the HM Treasury thinks they're going to bring in from these announcements, which always fascinates me. And like I said, it's so interesting that all the talk was on this figure, but it's only a paltry 1.2 billion. Whereas the employers and the businesses are going to suffer. The actual employers are going to have to shell out an extra 25 billion over the next 5 years. So that was the one that really caught my attention. Anything else to say? I think that's pretty much about it. So, but like I said, who knows if these will happen? Like the government has a pretty checkered past history of getting these right. Will this bring in 41 billion, or will it be 33 or 54? Who knows? Could be more. But most of the time over the history has told us it's a lot less. It's a lot less because of human behaviour. Like I gave you the example of the film company relocating to France. How many people are going to say enough is enough? Particularly, and this is this one here. Let's say a lot of these people working in the city, and they're on a decent salary, working in the financial services sector, which is now our biggest export, for goodness sake. And it brings in billions to the UK economy. But you get all these high flyers on big bonuses, and they go, well, I don't want to pay an extra 5%. Will it be a game changer enough for them to say, let's relocate, go to New York, go to Frankfurt, whatever? Will there be a brain drain because of this policy? or what's going to happen because of that policy and everything else. So there's all the human, the rationale, the human psychology of how people will react to these. And so will the tax take be anything like what is predicted? Who knows? Only time will tell. But if you like this video, my friends, do please subscribe if you haven't already. Leave some comments below as well what you think about all this lot. And as always, I'll see you soon.